So once again, we are back, and thank you so much for waiting, and thank you so much for coming on time. So as discussed, we are going to start with the session. As I speak in every session to begin with, that whatever we are going to discuss is purely going to be for information purposes. Um, we are going to discuss a few strategies today. We are going to throw some light on how the markets have moved um, from June till now, because last meeting which happened was around June and July. The interest rates were cut down in June. In July, interest rate meeting was mostly the same. The rates were unchanged, and now again it's September, and not to forget, today's central bank meeting, or tomorrow's central bank meeting, is going to be just a few days before Central Bank of US comes out with this interest rate decision. So expect a lot of volatility in the market, and for that you definitely need to diversify your portfolio, and we are going to go and see that what sort of products can be looked into. And please understand that the investments in financial markets carry a huge amount of risk. And if you're not careful, if you're not aware of the products you're investing in, you might end up making losses also. That is the part of the investment everywhere, but it's important that you should be um, aware of the product you're investing in. A lot of times, we as investors don't interfere into what consultants are telling us or what fund managers are telling us. And I work as a consultant, and I want to make sure uh, to tell you that please get involved. At the end of the day, it's your money, and sessions like this are only done to keep you aware about what's happening and how you can invest. So starting with what is ECB and how does it impacts the euro, right? That is something which is really important. We talk about ECB decision, we talk about European Central Bank interest rate decision, how it could impact, and most of the time we definitely think that this is some central bank, how much impact it is actually going to have. But the reality is that European Central Bank also, it is not something which is just a central bank, because if you see the composition of the central bank, it is basically the apex bank of the European member countries, and monitors the banking and financial functions of all the member countries to maintain the price stability of euro. And now most euro is adopted by mostly all the member countries, right, to maintain the price stability and prevent them from financial troubles. Primary job of the ECB president, which at this point in time is Christian Lagarde, and their immediate team, is to maintain the stability in prices within the economy, right? They want to create more job opportunities, create policies which can boost the growth. So this is where the European Central Bank also takes part. And as I said, it's a central bank for the members of European Union, and their aim is to maintain the price stability in Europe. They also kind of aim to control inflation, and that happens when they monitor the monetary policy, because monetary policy is something which is monitored by the central bank. And this is really important. Why? Because Central Bank of Europe is responsible for monitoring the any monetary policy, any financial policies which are made in uh, Europe. In case of US, this monetary policies are created by Central Bank of US, which is called Federal Reserve. Every country has a central bank. India has a central bank called Reserve Bank of India. Then there is European Central Bank, Bank of Japan, People's Bank of China. Central Bank of US is called Federal Reserve. Then there is Bank of England. There's Reserve Bank of Australia. There's Reserve Bank of New Zealand. There is Swiss National Bank. So uh, the Swiss Central Bank, for example. So the idea is that every central bank, it has a major function of controlling the money supply, and that money supply is controlled um, tight in a tight manner, or sometimes loosened up, just to control inflation, right? So, and inflation, as we know, it's not good but not bad. The reason is that inflation, as long as it is controlled, the modern concept is it is somewhere good for the economy also, because an increase in price is normally fueled by increase in demand, and increases demand is fueled by higher income levels. So when the supply of money is liquid in the economy and the credit is cheaper, it motivates people to borrow more and eventually spend more, which increases the demand and increases the price and creates inflation. Now, the part which European Central Bank plays in euro, most importantly, is maintaining the supply of euro across the European nations and maintaining monetary policies, because ECB has a president, right, which represents bank at a higher level international meetings. Then there are governing councils, executive boards, general councils, and the most important part is that the ECB will work with all the national central banks of EU countries. Together, they will form the European system of central banks. So it's cooperation between central banks in the eurozone, right? So it's the entire euro system. Now, as I said, there are governing councils, there are executive boards, general council, but I don't think that information is something which makes you more exciting. What is more exciting for you today is what is going to happen tomorrow, because there is a European Central Bank meeting which is going to happen, and it's going to happen tomorrow. Tomorrow there is going to be a big press conference followed by an interest rate decision, and a lot of traders, they are widely anticipating a interest rate cut. Now, this is something which is very important. Why? Because the European Central Bank is expected to cut interest rates just few days before the Central Bank of US comes up with their economic decision, their monetary policy decision. So a lot of traders, they're anticipating that there is going to be an interest rate cut at the Federal Reserve's meeting, which is going to be on 17th and 18th of September. And we're going to cover that Fed meeting also. So I think on 18th of September, we're going to have a webinar on FOMC and Fed decision. And this week it's going to be, which is tomorrow, is going to be European Central Bank. Now, few things which we need to remember: Eurozone inflation has come down, as you can see from the current slide. In the meeting which happened in June, European Central Bank, it cut interest rates by 0.25%, which is 25 basis points, and they deposited their they lowered their deposited rate to 3.75%, which was 4%. They reduced it to 3.75. Why they do it? Why European Central Bank lowers down the deposit rate? It's one of the ways to try to control inflation when it increases. Sometimes when it increases too much, or sometimes when economy feels the pressure of expensive credit. So the liquidity needs to be eased. And why it is important for European Central Bank to maintain its deposit rate to a level where it does not um, tightens up too much liquidity, and at the same time it does not motivates investor to keep money in the bank. So what normally European Central Bank aims, so what they have done is they have cut down the deposit rates. Lower deposit rate means it will motivate investors to not keep money in the bank as deposits, rather take out and invest into riskier assets which can give them more return, and at the same time put that money into use to generate some income. That is the logic why European Central Bank wants to cut interest rates. If they take the money out and spend, that increases the liquidity in the market, right? And again, at the same time, it eases inflation. Now, the European Central Bank have kept rates on hold at the meeting which happened in July, but they indicated that the September meeting would be live, which means that would uh, might introduce more rate cuts. Now, for this meeting, which is going to be tomorrow, it is widely expected that European Central Bank is going to cut interest rates by at least 25 basis points again, which is 0.25%. And slowing wage growth, which happened last quarter, it already has eased the central bankers. That the rising labor cost, that is one important part. Again, followed by the Eurozone inflation has come down to a 3-year low, which is 2.2% as compared to last month. So inflation is pretty much low in Eurozone at the moment. So focus will be on the central bank's assessment of how the data is going to come. Of course, what is going to be the future course of interest rate. So tomorrow, please understand, 4:45 p.m. UAE time, not only there will be an interest rate decision, but it will also be followed by a press conference. A lot of traders use press conference, um, and they see the press conference and they derive conclusions after that, and then they start trading. So if you see a lot of volatility in euro, which you should expect tomorrow, there could be a lot of volatility in euro and different European indices, German, Spain, Netherlands, all of these indices also you can buy and sell looking at the platform. So tomorrow, 4:45, we can expect a lot of fluctuations in the currencies and in the indices also. So be ready for that, because this is something which has been expected. Um, as I said, headline figures, it's a 3-year low for inflation, 2.2%. I mean, this is something which is really important to know, because this is what is making central bank um, prepared to cut down more rates by at least 0.25%. And this is, as I said, just few days before the Federal Reserve starts their own rate cutting cycle, right? And this rate cut, what is going to happen, it's going to be not very controversial. I think this is something which has been expected. Virtually all recently, the ECB speakers have confirmed that they would like to lower rates. And most of the central bankers and across Europe have considered to be more towards on the dovish side, where they want to cut the interest rates, right? Uh, in July, as I said, the European Central Bank left the interest rates unchanged. They did not change anything. And it was anticipated that in September, there is a lot of potential for reduction, and it's wide open. If the data allows, then there could be a decline in interest rates, and this will help to price all sorts of loans and mortgages at a much cheaper price, right? So that is the idea. And if we see, for example, the euro area inflation, as I said, it has hit down the lowest level since July 21. As you see, that somewhere in July 22, um, look at the headline inflation and the core inflation, and we have seen that the headline inflation has gone down a lot along with the core inflation. And this is something which we have observed. And this is another reason that why it is anticipated that we might see a further rate cut, and we might see a lot of people actually betting on, when I say betting, which basically means that they are thinking about, or they're expecting mostly, that the rate cuts will happen, and which could uh, push German indices higher, or other European indices also higher. So this is what is expected. Um, if you see the Frankfurt-based, the European Central Bank, they set monetary policy for these 20 nations which share the euro currency. And then this is one. As I said, that there is not going to be a very big revision of inflation or growth numbers, because some economists do predict that a new growth outlook for the euro area might be introduced, and it could be less, because in the recent data, what has been the most concerning is the weakening in the consumer confidence, right? So services area is also looking a bit shaky on the ground. So there is a lot of lack of momentum in the demand, which we have seen in the second quarter. Even in the manufacturing area, there is a lot of weakness, which we have expected. So the key question is obviously what's next, because the majority of analysts have expected European Central Bank to pause in October, right? But then there is slight chance that European Central Bank wants to cut rates sooner than later. And again, there are risks also involved. But then there is going we'll only get to know tomorrow, that in the press conference, that what is the future course of this. Now, as we see, what are the key rates of the central bank? So if you see Bank of England, you see European Central Bank. European Central Bank, after the June, the main refinancing rate was reduced to 4.25 from 4.5. For marginal lending, it was reduced from 4.75 to 4.5. The deposit rates were reduced from 4 to 3.75%. And as you can see, uh, only Swiss bank is less, around 1.25%. But rest, if you see Bank of England still up at 5%, right? Federal Reserve, as we know. So there are mostly at this point of time, European Central Bank, the inflation is less, but at the same time, the data which we are getting is also not very promising. The manufacturing and the growth forecast for the euro area is also not that great. So that could also push the interest rates to basically come down. Now, how often will the ECB cut rates in 2024 is also a question which um, has been asked by a lot of analysts, right? That um, if we see the base scenario, obviously a lot of analysts they're expecting that there will be two rate cuts in 2024, which will be first is going to be September, which is tomorrow. Other is going to be in December, and both the interest rates are expected to be around. The rate cuts are going to be around 0.25%. The deposit rate could stand eventually at 3.25% at the end of the year. And possibly, if there are three or more quarterly cuts into 2025, that can bring the interest rate down to 2.5% by next year in 2025. And that's the target, right? Again, there are a lot of expectations. I mean, there is a possibility that in September, there are two interest rate cuts, like September and December. In 2025, rates might go down by 0.25% each quarter, and eventually the targets are reached. 2.5% is the target for central bank to keep the rates at. And also, ECB governing council, which is the main body, they definitely want to avoid lowering interest rates too quickly also, because this is also something, if you lower down interest rates too fast, that might start a renewed rise in inflation, because the reason why interest rates were increased was to control inflation. But if the central bank starts cutting rates too fast, which means loans will become more cheaper, there will be no motivation for the people to keep deposit in the banks because interest rates are going to be less. So there will be more borrowings, there will be more spendings, demand might increase again, and that could increase inflation. So I don't think at this point of time the European Central Bank wants to cut rates too quickly, because that can again start a new rise in the inflation, and nobody wants that, because then it affects the stock markets, it affects the bigger companies also. Now, most importantly, it affects the people. Now, the only thing that speaks for additional rate cut in October, if it happens, would be if the economic data comes very bad, if the economic slump continues. Because what was the first reason of cutting rates was Germany getting into recession. So even in October, if the economic slump continues, then there is a possibility that rates might cut down. Also, there is one more reason. If US central bank cut interest rates more than expected, it might pressure European counterparts also to cut down, right? So this is something which is expected, guys, and because that might reduce the GDP growth outlook also in this meeting. And we have to be careful, uh, because a lot of people have asked that